Tom Piotrowski is live for a look at the markets today. What's happening, Tom?
Pete, the markets have had a rough time overnight for a variety of reasons, but it was always going to be a challenging window of time the last couple of days of the week. We had a brace of central banks overnight raise rates, the Bank of England and the European Central Bank amongst them, but within that, the narrative that they used in relation to the medium term and rate hikes, they're still talking a tough game when it comes to rate rises. So that's significant and also important from a credibility perspective for central banks. To keep inflationary expectations anchored, central banks need to do this, but it comes at a time where the markets are now shifting their concerns away from inflation and more towards growth. And in the last couple of days, we've seen in regional terms those weak figures out of China and the concerns around the success with which the Chinese authorities are going to have when it comes to reopening the Chinese economy is casting a bit of a pall over the growth picture for our own neck of the woods. So that's part of the reason why we'll be down by 1.2% when we kick off later on this morning. US markets gapped lower at the open and they went on to make some pretty sizable lows. As we speak right now, we've got the Nasdaq down by around 3% and the S&P 500 down by 2.3%. Adding to the pressure on Wall Street, it had some much weaker than expected retail sales numbers as well. And just to highlight the extent of the selling, Netflix shares are down by around 9%. So again, tying in with this narrative around moderating growth, they've had trouble with some of their ad sales, and that's coming back to haunt them at the moment. So the shares, as I said, down by about 9%.
Harry and Meghan documentary on Netflix. Maybe that's why it's plunged 9%, Tom.
Oh, look, I wouldn't point the finger necessarily at the poor royals, but the reality is that the ad sales for Netflix haven't been as good, and they've actually offered to return money to advertisers where their ads haven't run yet, and that has gone over like a lead balloon with investors.
Yeah. All right, Tom, thanks.